All right, welcome back to the show. Now for our mortgage moment. There's a lot going on in the mortgage world, so there's always good news. And Tucker, in our pre-show, I kind of looked over some of the topics, and I got to say, this is some pretty interesting stuff. Maybe it's just for us, but I think this will be good. So let's talk about the recent mortgage rate trends. What the heck is going on out there?
Yeah, so great news here is rates have come down a bit. So last week, interest rates dipped to the lowest levels that we've seen really since early February. And it's really providing relief for homebuyers and giving them a little bit lower monthly payments for borrowing money, which is huge. And so what we've seen mortgage applications tick up because of that, as people are catching wind that rates are starting to come down, and so that mortgage application demand is starting to surge, and it's definitely going to start to impact competition in our market.
So when you see mortgage rate come down, what do you foresee for the next, say, 3 to 4 months? Is it gonna just kind of stick around this spot here right now where we're at?
I do. Yeah.
Okay.
I think we're going to be flat at least through June or July. I think in June or July is when we might start to see a little bit more pressure downward.
Uh-huh.
Really, all eyes are on inflation data. That's what the Fed's really concerned with. But what's really kind of the elephant in the room that I think all of us don't really know what the impacts are going to be is the campaign. What's going to happen as they start to use some of this stuff to campaign for the presidency.
Gotcha. So then since you mentioned inflation, let's talk about its impact on mortgage rates.
Yeah, so historically, when inflation rises, mortgage rates tend to follow suit. So cooler inflation, if we slow down the rate of inflation or the price of consumer goods, it'll put less pressure on the Federal Reserve to control inflation, which will allow them to drive or to push rates downward.
Okay, so that's why if things get under control in the inflation game, we're going to see lower interest rates, maybe.
Yeah, absolutely.
And if inflation stays where it's at, we're staying where we're at.
Exactly. Yeah, you're gonna be in a holding pattern as long as inflation stays here. The Fed controls the overnight spending rate between banks, so they don't really control everything. But if banks borrow money at a higher price, they're gonna then charge us consumers higher prices on other
Okay.
programs.
So what is the policy now and the rate hikes that you're going to see in your opinion?
Yeah, so and really it's looking to the industry experts right now, we're expecting that the Fed has about a 58% chance to lower rates in June, which is a significant improvement because just a few weeks ago we thought there was a 0% chance of a decrease in June. We thought the earliest was going to be July, and now we're seeing more than 50% probability that we'll see the first minor cut in June. So that's really great news, and that's allowing us in our hedging efforts to lower rates already.
Okay, so from a standpoint of, I feel like we're kind of in this nether region, and most buyers at this point should understand that focusing on whether or not the interest rate is going to be higher or lower is really not the name of the game going forward. The name of the game is basically, like we talked about, getting ready, is make sure you have saved up money and that you've done that, because we are seeing a lot of interest in new listings coming on. And that means there's some competition. If you're not ready to go, you're going to run anything. Last thoughts for you, Tucker?
Yeah, I just would like to remind all your viewers and home buyers that when you lock into a 30-year fixed rate mortgage with no prepayment penalty, it's truly the best thing ever. That's the worst payment you will ever have, right?
Mm.
You're not going to refinance because rates go up and you want a higher monthly payment. So, to your point, get ready, buy when the monthly payment makes sense, and then watch the rates. And if they come down, refinance in the future. But yeah, buy now, secure the home, and let equity start working for you, and then worry about refinancing to control payment down the road.
I like that. Awesome. Tucker, as always, I appreciate your input. Appreciate you joining us today. We're going to take a short commercial break. Then we're going to welcome our good friend Claudia from the Brilliant Health Institute back on the show. I think she's been here before, so I look forward to hearing her update. Thanks again for your time. We'll be right back after this short break.